Good evening and welcome to our June 2021 webinar. We are absolutely thrilled to have you join us today. My name is Lisa Judge and I'm the Manager of Member Advice and Education here at Active Super. Today we will be hearing from one of our client relationship managers, Bill Halliwell. Bill's been with us for 18 years actually, so he's a long-standing employee. And he's one of our representatives across our team through New South Wales. And we are so happy to have had such a great response from our members. And tonight, our focus within this presentation will be super smarts for the end of financial year and into the new financial year. Please note that we will address questions at the end of the presentation. So if you do have a burning question, please feel free to ask within the Q&A section of the webinar. We are unable to address personal advice questions in this format, and if we don't get a chance to get to your actual question, please feel free to email us at hello@activesuper.com.au. I have added a link to the Active Super Financial Services Guide within the Q&A area as an announcement. The Financial Services Guide, or FSG, is an important document that explains what you can expect to receive from the service, the types of advice, our privacy policy, complaints procedure, how you can contact us. It also lets you know we're authorised and qualified, and it also contains a lot of other valuable information. But now, without further ado, I'll pass it over to Bill to start the presentation.
Thank you very much, Lisa, and welcome everybody to our Super Smarts webinar this evening. I hope wherever you are, you're feeling quite warm. It's a little bit cold where I am. My name is Bill Halliwell. I'm the Client Relationship Manager based in Wagga. And today we're going to be looking at three things: budget changes that affect super, some end of financial year super smarts, and other good superannuation news. The information in this presentation is general information only and does not take into account your personal objectives, situation or needs. You should consider obtaining professional financial, taxation and or legal advice tailored to your personal circumstances, and refer to the relevant product disclosure statement available at activesuper.com.au before making financial decisions. But first things first, we have a new name. So say hello to Active Super. Not only do we have a new name, but we also have a new logo, a very, very colourful logo. And I hope that everybody likes it and gets used to seeing it on our website. It certainly looks a lot different to when we last saw you. And but whilst we've got a new name, we still have the same mission. And that mission is to deliver strong financial returns through responsible investment. And to do that, we still remain a profit to member industry fund for local government employees. We're still open to anyone who wants a secure future for themselves, their community and the world. We're still very active in how and where we invest your super so that you can live the best possible life, not only before, but also after retirement. We're still encouraging members to take an active role in their super. And we're also actively seeking ways to deliver value and service to our members. The important thing with the new name and the reason for it is to try and broaden the member base to allow us to continue to grow and keep competitive in a very, very rapidly changing landscape. But while things haven't changed as far as what we're delivering. What we do have is a brand new website, activesuper.com.au, and very soon we will have a new app for you to use and there'll be some new things that you can do on this app, and so hopefully it's going to be more member focused and allow you to do a number of different things that you can't do right at the moment. Another very, very exciting thing is that we've been able to reduce the fees that are being charged to our members. We're always actively looking for ways to deliver value to our members, and if we can lower our fees, it makes us much more competitive, but also much better for you as a member. We've already lowered admin fees for the second year running, and from the 1st of July, we're also removing the switching fees, which means that when you'd want to change, or if you want to change your investment option, the switch from one option to the other will be totally free to you from the 1st of July 2021. So moving right along to the budget news, since our last webinar, the government brought down their annual budget, and with all of these proposed, or all of these things we're going to discuss, most of them are proposals that require legislative changes and also have particular eligibility rules that apply to them. So it's very important that you probably have a talk to someone about them before you look at introducing anything that may be of benefit to you. So some of the things in the budget that may be important to you as a member: firstly, the removal of the $450 monthly income threshold for super guarantee. Prior to now, people who earned less than $450 per month, there was no requirement by the employer to contribute to super. So from now, there'll be more Australians receiving super contributions, which is a good thing for those low income earners and casual employees. Changes to the First Home Saver Super Scheme. The First Home Saver Super Scheme gives first home buyers the opportunity to save through their superannuation, and this proposal is going to allow people to have a maximum contribution increased from $20,000 to $50,000 to use for a deposit on their first home. This is going to give them much more opportunity to get into the home or the property market. For the older of our members, there's a lowering of the eligibility age for the downsizer contributions. The minimum age for this downsizer contribution is going to be reduced from 65 to 60 years of age, and this potentially gives the opportunity for members to utilise some of the proceeds from a downsize of their property and put that into their superannuation fund and enjoy the benefits of being in super. The final one on the page is the changes to the work test for those aged 67 to 74. So no work test is now going to be required from the 1st of July, if it's passed, 2022, for non-concessional and salary sacrifice contributions. So this gives the opportunity for people to add extra money to their super, and that can be beneficial in a number of ways to save potentially tax, and also from a Centrelink perspective in some circumstances, or their estate planning. So let's move on now to the end of the financial year, Super Smart. So this is opportunity for you to put into place some things before the end of the financial year. A quick reminder about the different contribution that you can make into superannuation. Firstly, there's what they call concessional contributions, which are before tax. Concessional contributions means that instead of paying your marginal tax rate on the contribution you make into your super, you pay just 15%. So advantageous from a taxation perspective. And that is versus the non-concessional contribution or personal contributions, where if you come into a windfall, if you have perhaps a inheritance or just money sitting in the bank, you can make the personal contribution after tax into your superannuation fund. So they're quite different, and they have different rules relating to caps and how the money is taxed, obviously, on the way in. One of the concessional contribution options or strategies can be what they call a tax-deductible personal contribution. This allows you to use money that you may have sitting around in the bank or a windfall that you have to make a contribution to your super before the 30th of June and claim a tax deduction on that. So in effect, you're paying 15% when the money goes into your super fund, but you're claiming your marginal tax rate through your tax return at the end of the year. The money is contributed into the super. It needs to be received before the 30th of June and needs then to be accompanied by a taxation form, which in some cases doesn't need to be completed before the 30th of June. It gives people the opportunity to work out what amount of tax deduction is going to be best suited to them. But it doesn't, that opportunity to do it after the 30th of June doesn't apply to everybody. So check with us when that forms needs to be provided. The other opportunity that you have leading up to the 30th of June is if your superannuation balance is under $500,000, the opportunity is for any surplus concessional cap or any unused concessional cap can be brought forward from previous financial years. So the cap currently is $25,000 and it was capped for each individual financial year. Under the new or under the proposal or under the arrangement now, you can bring forward any unused cap from the previous 2 financial years into future financial years. And that's going to be a rolling 5-year arrangement commencing from the financial year 2018-2019. Another opportunity for people, and this lends itself to people in the low income range, is a government co-contribution. So for people who earn less than $54,837, you can make an additional after-tax contribution to your super and get a top-up from the government of up to $500. Now, the range for this depends on your income, and it can range from the full $500 if you earn less than $39,837 up to the $54,837 on your screen, where you receive no benefit from the government at all. So depending upon your income, depends on the amount of top up you receive from the government through the co-contribution. The contribution needs to be made after tax. The other opportunity you have is what they call spouse contribution splitting. Not necessarily well known, and it has absolutely nothing to do with divorce or separation. It's all about the opportunity for a spouse who contributes concessional contributions into their fund to contribute up to 85% of that, or transfer 85% of that into the spouse's account. So this helps boost the receiving spouse's superannuation benefit, and it obviously lowers the tax for the contributing spouse. It also gives other opportunities which you might like to explore in relation to if one member of the couple is pension age, and it can be a situation where you have a win-win in relation to that situation. That's a fair bit to take in, but there's still more. A lot more. Christmas in July. So we've touched on things you can do before the end of the financial year, so before July, but here's opportunities for you to take advantage of things come July. The low and middle income tax offset has now been extended for 21-22 financial year, which means that you continue to get those tax benefits that the government gave and passed back in October last year, but was backdated to July. So as well as having the tax benefits for this coming financial year, 2021-22, many people didn't receive the full year tax benefits because they were only introduced in October. They weren't necessarily backdated in your pay to July. So you may find that you're going to get some of that tax benefit in your tax return at the end of this financial year. This allows you to perhaps use that to boost your superannuation, whether it be again pre-tax or post-tax. And if you use it as a pre-tax contribution, you're using some of your tax benefits that you've got from last financial year to benefit you again in 21-22. So again, a win-win situation if you're able to take advantage of that. The other changes that come in from the 1st of July and give you a little bit of an opportunity is the changes to the thresholds. The threshold changes from or to non-concessional contributions increased from 100,000 to 110,000 from the 1st of July. So that gives you an opportunity to add extra after tax. And the changes to the concessional contributions cap increased from 25,000 to 27,500 from the 1st of July. Again, giving you an opportunity to boost your super a little bit more and still take even a further tax benefit through the salary sacrifice arrangement or personal tax deductible contributions. And a final tip for those paid under the local government state award, you're going to receive a nice 2% pay rise come the 1st of July. And here's another opportunity, because we find that a lot of our members take advantage of the fact when they get a pay rise, whether it be under the award or maybe a promotion, a grade increase, whatever it might be, to top up their super and give themselves a little bit extra into their super while they're not missing that additional amount that's going into their pay. So using the additional amount that's going into their pay to top up their super, and they don't miss they don't miss it then. So a great opportunity for people to utilise that. And perhaps something else that I should mention, from the 1st of July, the super guarantee increases from 9.5% to 10%, giving people extra money into their superannuation. So we've discussed a few ways that many of our members can get active with their super, boost their super contributions before and into the new financial year. So if you need to determine what's right for you, we're here to help you through that maze, if it is a maze, or just help you with a few little tips and tricks that you might be able to use leading into the end of the financial year. If you've got any burning questions that you'd like to be answered, tongue twister, please feel free to comment and send them through our question and answer sections. So thank you for listening, and also remember, if we are unable to answer any of your questions, we are only able to answer questions in a general format through this session. And if we're unable to answer any questions relating to personal advice, then the opportunity for you to answer those questions are through any of those contact points on the slide there.
Thanks for that, Bill. So what I'll do now is I'll just let you know about some of the questions that have come through, if you wouldn't mind responding to a few of these.
Sure.
So, yeah, great. How long do binding nominations last? That's the first question.
Okay, so to explain what a binding nomination is, it's nomination of a beneficiary for your superannuation. If something happens and you were to pass away, it's necessary for you to have nominated a person or persons that you wish to receive your superannuation and any insurance that might be attached to it. They only last 3 years, so it's very important that you update that beneficiary every 3 years so that it continues to stay current and continues to stay the right person that you want to receive those proceeds if you passed away.
Excellent. Thank you for that very comprehensive explanation. So the next question is, what are the rules with making spouse contributions?
Okay, so spouse contributions, another way where you can build up your spouse's superannuation. It allows the partner of a person to make a contribution after tax into the spouse's superannuation, but then receive a rebate of 18% of anything up to, anything up to, I think it's $6,000.
Oh, for the spouse?
So, yeah.
I'll jump in. For the first 3,000, up to 18%. There you go. So up to $540 rebate or offset.
Sorry. But to receive that, you must, or the spouse must receive an income of less than $37,000 to receive the full 18% rebate.
Yep, that's right. And it's phased out up to income of $40,000. So as an example, if somebody's earning, the spouse is earning $39,000, then it's 18% on the $1,000 that's remaining of the contribution. So up to a $180 offset in that example of $1,000 contributed. Excellent. All right. So we do have another question here. I work casually. I'm self-employed. As a sole trader, I wish to add to my super before end of financial year. So not through the company, but through a personal, and claiming a tax deduction. that's the general gist of the question here. So did you want to just maybe run through the personal deductible contributions bill again, just to clarify?
In that person's situation, sorry, I just cut out there.
Yeah, sorry. It's a bit cold at Wagga Wagga, isn't it, this evening? So the wires might have dropped out. So basically the question came through. It's a casual self-employed individual wishing to add to super before end of financial year. And it looks like it's a personal deductible contribution that they're asking about. So did you just want to run through quickly a little bit about making the personal deductible contributions again?
Yeah. So personal deductible contribution is where you make a contribution to your super and make an intention to claim a tax deduction at the end of the financial year. So for a person who's self-employed, they can utilise that deduction or that contribution, I apologise, into your superannuation as a tax deduction at the end of the year, reducing their taxable income and therefore reducing their overall tax. When the contribution goes into the super fund, it is still taxed at 15%, but the gain for the contributor is their marginal tax rate is applied to the deduction that they receive in their tax return.
Excellent, thank you very much. The next question that came through is, how do you access the member online?
How do you access member online? So on our new website, activesuper.com.au, you'll find a login portal portal where you click on that and you go to register now and put in your details, your member number, your personal details, etc. Give yourself a password and a few security questions, and you then have online access. You're also giving yourself a password to use going forward. So then you use your member number and your password to access your superannuation details, your investment options, your beneficiary, making sure that's up to date, and keeping track of the contributions that your employer may be making over that period of time. And you can also change your investment option on the online access.
All right. Well, looking at the time, we've only got a couple of minutes left, so we will have to wrap up. That is all the time that we do have for questions this evening. We do hope you enjoyed the webinar. Do remember that if there are a couple of questions we didn't get to, unfortunately, because of time constraints, but please do remember to email, call, or go on our website and start a web chat to ask some questions, any questions. And we do have a Sydney-based call centre that's wonderful in responding to questions through the day as well. So make sure you look out for our invitation to the July webinar, which will focus on a wrap-up of performance and the markets for the 2020-2021 financial year. Until then, thank you for being a valuable member of Active Super and for taking the time to listen to us this evening. Good evening.
Thank you very much.